Well, good morning to all. And today we are back taking another look at WTI, crude oil. A few videos back, we looked at Brent. We explained why Brent might be the ideal asset to go long or go short, depending on how you want to play that. But obviously, we cannot completely ignore WTI because it's also moving relatively similarly to the Brent. The oil market has been incredibly volatile over the past few weeks, to be fair. And even this week, we saw an initial drop down to the 50 Fibonacci here at 93 or so after rejecting the 61.8 Fibonacci resistance here to be also a bit more clear. And this drop came after President Trump made some surprisingly conciliatory remarks regarding Iran's new leadership, calling them much less radicalized and far more intelligent than his predecessors. So many traders, of course, interpreted this as a step towards a ceasefire. And, well, they took profits. However, the drop completely reversed since yesterday. Okay, Trump came out and clarified his stance, stating firmly that the US will continue attacks and that they're going to finish the job. So the market received its answer loud and clear. At least for now, that's a loud and clear answer because tomorrow it might change again. And what it is for now, it is that there is no immediate ceasefire on the table. So this is to be considered a hawkish interpretation, okay? And that sends oil prices surging. Let's have a quick look on that surge. We are looking from, well, let's take it from the open of today. We're looking at around 8% rise so far Thursday early trading, to be fair. It's nearly noon in Cyprus. So, adding fuel to the fire, an oil tanker, also the Stagato Energy, was hit by Iranian missiles. That happened, of course, on Wednesday. It doesn't really show that there's been a pricing in reflection here on the Wednesday, but what is becoming more important is that because the UAE is considering military action to reopen the Strait of Hormuz. So, with the conflict showing no signs of de escalating, the fundamental upside pressure on crude remains fully intact. So, let's look at what this means on the daily. A quick reminder, we looked at the double bottom over here, the neckline breakout, and the measured move um, extension up to 98. And why are we here and repeating this today is because we have been facing resistance at this point for a long time. So if we do close above that level today and for another two sessions and reclaim 61.8 and the peak at 103.40, then this would eventually lead to a rise up to 112 and then perhaps the 200 Fibonacci at the 120 level. The Fibonacci, by the way, it's measured from the neckline to the bottom, which extends the measured move range, let's just say. Now, we are looking at the correction down to 50 and another leg up towards the 61.8. So we could get a consolidation here, and anyone could use these two levels as a long position to for a breakout or short position to sell the rally. Or if we are at the bottom, it could be a sort of a bounce to the upside, also could be shorted for further declines. So it's, of course, unlikely for us to know with confidence what's going to happen. We are here to analyze the market and try to project where prices might go. So we have a very important Fibonacci. This is the takeaway here, 93, 102. And we are above the measured move 100%. If we look at the daily RSI, there is this massive spike up to 112 that allows everything, any other price action since, to be considered as a normal price action in terms of momentum. However, if you go close and notice these two peaks, with the high one being the most recent, you're going to see that there is a short-term hidden divergence that has sent prices to the downside to the 50. And since then, we didn't actually go below that low. That means that with high RSI momentum, the likelihood of going back into the overbought territory above the 70 is increasing. And if we do stay 3 days above the 61.8 at 102, because literally we are reclaiming the 100 currently as we speak, triple digits, that this could get us to all the way up to 88 again on the RSI level. Okay. However, the RSI isn't really giving us much signals right now. The pullback to the 50 formed a hidden, comes after a hidden bullish divergence, and then now without any signals that suggest now this move to the upside remains strong. So what is the game plan? If this bullish momentum continues and we break and close above the 61.8, the door flies open. The next target is 112. The one after is the 200. How you may play this? There's different ways to enter. Breakout, wait for pullback or not. But volatility here is important. A pullback down to retest that measured move 100% is also a possibility. So I would be looking at a stop below the previous low and the target initially at the 161.8, then can extend up to the 100 with a trailing stop. For shorts, you could attempt a short rejection at the 1-2 or a double top, let's say at 103, whatever that is. However, given the extreme geopolitical risk and the fact that tankers are still being attacked, stepping in front of this bullish trend might be a little bit premature. If signals, of course, arise, especially if we say on the 4-hour RSI, which I don't see that being the case, then fine. So what could happen essentially is that we're going to see prices moving higher up, create a new price high, and then the RSI essentially not following through. So that could be an indication for a retest of the 99 or so, which could be a buy the deep scenario. So keep an eye on the headlines and that 102 breakout level, and I'll see you in the next video.